What's up, guys? Today's video is about 3 different ways that you can profit from owning real estate. If you're interested in that kind of thing, enjoy. Alright, so the first way that you can make money from owning real estate is by making your monthly mortgage payment. At the beginning of your mortgage, you have the highest principal balance you're going to have the entire time. Each month, when you make a payment, a portion of your mortgage payment goes to interest and the rest goes to principal. As you pay down the principal balance on your mortgage, the amount of equity you have in the house increases. So after 5 years, you own more of the property than you did at year 1. So another way of looking at this is that your bank owns a portion of the property and you own a portion of the property. In the beginning, the portion that you actually own is whatever your down payment was. As you continue to make your mortgage payments, you pay the principal down. The interesting thing about mortgage payments is in the beginning, you're paying the highest percentage of interest, and as your mortgage payment term progresses, you actually start to get to put more and more towards principal. So if you ever look at your mortgage and the breakdown of the amortization, it's a little bit disheartening in the beginning because you see such a high portion of your mortgage payment going to interest. The nice thing about gaining equity in your property by making your mortgage payments is that it's not going to be subject to taxes. This isn't going to be considered a capital gain. One other side note about the increase in equity is that with every mortgage payment, your net worth is actually increasing. Your net worth is based on a formula that is essentially your assets minus your liabilities. So as you own more and more of the asset, you actually owe less and less money to the bank, and your net worth is increasing with every payment. Alright, so a second way that you can profit from real estate is through appreciation. Appreciation is when the property value increases during the time that you own it. So the buying price is less than whatever you choose to sell the house for. I'll give you an example from a property that I owned in Kelowna. I bought this property in 2015 for about $220,000 and I sold it in 2017 for $300,000. Now, the property had appreciated, but I had also made some improvements to it. But overall, the sale price was significantly higher than the purchase price. So the appreciation of a property does come along with a lot of tax implications. If it's not your principal residence, it's going to be subject to capital gains. Now, there's 2 ways that you can look at this. You can be discouraged because you have to pay tax, or you can be happy because you made a profit on something. The nice thing about capital gains in almost any jurisdiction that I've seen, the tax rate on them is significantly less than regular income tax, meaning that you have to pay a lesser amount than you would if you were working a regular job. Alright, so the third way that you can make money owning real estate is through positive cash flow. This way is my personal favorite, and it used to be said that cash is king, but I tend to disagree with that statement. Cash flow is king. You want a monthly cash flow. How do you calculate this? Well, you can look at it monthly, but I think it's more effective to look at things at an annual basis and then break it down monthly once you're done. If you look at things annually, you'll be able to factor things in like property tax, insurance, and other expenses that you might not get on a monthly basis. Once you tally up all of your expenses over the entire year, simply divide it by 12, and then you can figure out what your rent is. Be sure to factor in things like vacancy and repairs when you're looking at any sort of cash flow forecast. Another thing that you can do is to look at what market rents are in your area and then be conservative with them. The trick to buying a property that cash flows is being conservative in your estimates. So if you think you can get $1,200 for rent, be conservative in your forecast and put down $1,000. If you can turn a profit at just $1,000 per month rents, then if you get $1,200 a month instead, you're going to be laughing. Same thing goes for your expenses. If you think the expenses are going to be $800 a month, factor in some contingency because there could be some things that you're missing. You definitely need to be certain of what the market rents are in your area before you pull the trigger on a property. With the availability of information online, this should be pretty easy to do. If you were somebody looking to rent in that area, you'd look on Facebook Marketplace, Kijiji, Zillow, or any other number of places. What you want to do is be confident in your number so you can have a confident forecast. Okay, so today we went over 3 different ways that you can profit from owning real estate. The first one was increasing your equity by making your mortgage payments and increasing your principal in the property with every payment. The second way to profit owning real estate is to have the property value appreciate over the time that you own it. The last way is my favorite, but it's also the most difficult to do. If you think about things, as long as you make your mortgage payments on a property, the first way is almost guaranteed. The second way, appreciation, now there could be short-term market fluctuations, but history has shown us that over time property values have increased. Cash flow, on the other hand, that one's a little bit of a wild card in this whole thing. For me, it's my favorite one, but it is the hardest one to do. But it's also the one that could set you free from your day job, if that's what you're looking to do. You want the cash flow because you want to have the passive income. Now, the nice thing about cash flow is that over time, typically market rents are going to increase and your mortgage payment isn't going to increase. So the longer that you own a cash flowing property, the better the monthly cash flow should be. So anyways, just some things to think about. Hopefully there's a few takeaways from this video. And if you like the content, I'd really appreciate it if you give the video a like and you subscribe. Thanks for tuning in, and goodbye now.